Look at your screen right now. I don't mean the one you're watching me on. I mean your trading screen. What do you see? You see opportunity. You see setups. You see the potential for a win. That's what you're focused on, the win. But I'm going to ask you to look at something else. Something ugly. Something we all try to ignore, to avoid, to pray away. The loss. The entire trading industry, the gurus selling indicators, the flashy Discord alerts, the back-tested perfect systems, they're all selling you the same dream. A world where losses are minimized, or better yet, eliminated. They're selling you the fantasy of being right. And you bought it. I bought it once too. It bankrupted me. Here's the truth they don't tell you. Your obsession with winning is your greatest liability. Your desperation to be right is a gaping hole in your account and your soul. The very thing you're trying to avoid, the loss, is the only doorway to the success you crave. The title of this video is an acute paradox. It's the operational manual for survival. To win, you must get comfortable with losing. Not accept it grudgingly. Get comfortable with it. Make peace with it. Understand it at such a deep level that it no longer rattles you. Today, we're going to tear down the monster you've built in your mind and rebuild it as your most valuable teacher. Let's get into the mechanics of your own destruction. When you are terrified of a loss, what happens? I mean, really happens in your body, in your mind? You enter a trade. It goes against you by a tick. Your heartbeat changes. You lean forward. You're not watching the market anymore. You're watching your P&L. That little negative number becomes a ticking bomb. Your rational mind, the one that placed the trade with a stop, goes offline. The primal brain, the amygdala, the one that handles threats like a saber-toothed tiger, takes over. This is the fragile trader. Every loss is a personal indictment. I'm wrong. I'm stupid. I'm a failure. The trade isn't wrong. You are wrong. So what does a fragile ego do? It defends itself. It lashes out. You move your stop loss further away because being stopped out is an admission of defeat. You average down, throwing good money after bad, trying to bully the market into agreeing with you. You revenge trade, jumping into the next setup with twice the size to make it back, which is the most expensive phrase in the trading dictionary. The loss itself didn't kill you. Your reaction to the potential of loss crippled you. You broke every rule. You abandoned your process. You handed control over to the market and your own panic. Now, watch the resilient trader. Same market, same setup, same initial move against them. Their heartbeat? Steady. Their breath? Even. They might even lean back. They see the price nearing their predefined stop. They're observing, not pleading. The stop hits. There's a click of the mouse. The loss is realized. And then, they do something extraordinary. Nothing. They don't scream. They don't curse the manipulators. They might jot a note in their journal. Stop hit. Plan executed. And then they look away. They stand up. They get a glass of water. Their mind is clear, clean, empty. They are ready for the next opportunity, completely unburdened by the last. The loss, to them, was not a verdict. It was a transaction. It was the cost of finding out if their edge was present on this particular trade. It wasn't. So they paid their fee and left the casino floor. They preserved the only thing that matters, their capital and their mental clarity to fight another day. The market isn't a test of who's right. It's a test of who can be wrong, gracefully, repeatedly, and still stay in the game. The fragile trader breaks under that test. The resilient trader is built by it. You have to change the very language you use in your head. Right now, a loss is a loss. It's a black mark, a failure. Let's burn that definition. From now on, a loss is a business expense, a market data fee. Think about any other business. Does a bakery get angry at the cost of flour? Does a carpenter rage against the price of lumber? No, they factor it in. They know that to sell a loaf of bread, they must buy flour. Some flour might be wasted. Some lumber might have a knot and be unusable. It's part of the cost of creating the final, sellable product. Your stop loss is your flour. It is the raw material cost of your business. Your business is finding and capturing profitable trends or price movements. You cannot do that business without this cost. Your edge, your strategy, is your recipe. It tells you, based on my research, if I buy flour, risk capital, under these specific conditions and follow my recipe, trade plan, over 100 loaves, trades, I will sell enough at a profit to cover all my flour costs, my overhead, screens, data, and leave a nice profit for myself. Do you see? The goal of the baker isn't to make every single loaf perfect. The goal is for the business to be profitable. Some loaves will burn. That's fine. The cost was accounted for. When you view your stop as a business expense, the emotional charge vanishes. You're not losing money. You're allocating capital to research and opportunity. This is how professionals think. They don't celebrate winners and mourn losers. They review process. Was the expense justified by the setup? Did I manage my inventory, capital, correctly? If you want to think like a professional, start with this. At the end of the day, you shouldn't be looking at your net P&L first. You should be looking at your expense report. Were my expenses, losses, within the acceptable budget for the opportunities one took? If yes, you had a good day, regardless of green or red. You followed the business plan. Okay, mindset is shifted, but old habits die hard. When that loss hits, the old ghost of failure will try to whisper in your ear. You need a weapon to fight it. You need a ritual. This is non-negotiable. You must have a post-loss ritual. This is more important than your entry technique. I call it putting on the lab coat. After a loss, you are no longer a trader. You are a scientist, a dispassionate researcher. The trade is not your baby. It's a specimen. Your job is to dissect it for data. Here is the exact procedure. Have this checklist open on your desk. Step 1. The process autopsy. Question: did I follow my trading plan with 100% fidelity? Entry, stop, target, position size. If yes, this is a win. I'm serious. Stop right here. You have just achieved the single hardest thing in trading. Perfect discipline in the face of adversity. The market gave you a loss, but you gave yourself a victory in process. Write "discipline win" in your journal. This builds the neural pathway that connects following your rules with positive reinforcement, even when it hurts. If a no, this is your gold mine. Where did you crack? Did you enter before the signal? Move your stop? Size too big out of boredom? This is the real loss. The money is just the symptom. The disease is the deviation. You must write this down. Deviation: moved stop because I felt it would come back. This is the behavior you must exterminate. Step 2. The market autopsy. Question: did the market structure objectively invalidate my thesis? Look at the chart now, without your emotional position. Analysis: did price blow past a key level? Did volume dry up? Was there a fundamental news spike? Find the market-based reason the setup failed. This turns "I was wrong" into the conditions for my edge were not present. This is clinical. This is learning. Step 3. The single data point. Task: extract one lesson. Just one. Not a life story. A data point. Examples: on false breaks of the 20 EMA, the reaction tends to be violent. Note for future. Or my revenge trade impulse peaks 2 minutes after a stop out. I will mandate a 5-minute break. This lesson gets added to your business playbook. Your edge gets sharper. The loss just paid for your education. This ritual does something profound. It installs a pause between the event, the loss, and your identity. I am a loser. It fills that pause with objective analysis. Over time, your brain starts to anticipate the ritual during the trade. It starts to think, I need to follow my plan so my post-trade analysis is clean. You become your own coach. Knowledge is useless without practice. You need to build the muscle memory of comfort. Here's your gym routine. 1. Pre-trade visualization, paying in advance. Before you click buy or sell, you must do this. Close your eyes. See the chart. See your entry. Now, visualize price moving against you. See it hit your stop loss. Hear the alert. Feel the sensation in your gut. Now, in your mind, see yourself calmly closing the trade. Writing "plan executed" in your journal. And moving on with your day. You are prepaying the emotional fee. When it happens in reality, it's just a formality. You've already felt it. This is what athletes do. They visualize missing the shot, then refocusing. 2. The loss first journal. Most journals are trophy rooms for wins. Flip it. Dedicate 80% of your journal to losing trades. The process autopsy, the market autopsy, the data point. Wins get a brief note. Plan followed. Edge worked. By focusing your analytical energy on losses, you reprogram your brain to see them as the primary source of valuable information. Wins are just the payout. Losses are the work. 3. The desensitization drill. This is powerful. On a simulator or with the smallest possible real size, I'm talking 1 micro lot, 1 share. Your goal for a week is not to make money. Your goal is to take 10 perfect losses. Find your setup, enter, place your stop, and actively want the stop to get hit. Your mission is to practice the feeling of being wrong and it being okay. Do this 10 times. You are sanding down the neural pathway of panic and building a highway of calm execution. You are making loss boring. And in trading, boring is brilliant. 4. Language engineering. The words you use in your head create your reality. Ban these phrases. I lost $50. I spent $50 on market data. I got stopped out. My risk management protocol was executed. This trade is failing. The market is informing me my thesis may be incorrect. It feels silly at first. Then it feels powerful. You are the narrator of your story. Narrate a story of a professional, not a victim. This isn't about one trade or one day. This is about the long game, the marathon. The market is a ruthless ecosystem designed to transfer wealth from the impatient, emotional, and entitled to the patient, disciplined, and humble. Winning is not something you do. It is something you accumulate by not destroying yourself. The vehicle for that accumulation is a mind comfortable with the cyclical, inevitable nature of loss. Your challenge this week isn't to make money. I forbid you to care about your net P&L. Your challenge is this. For every trade, be more interested in the quality of your loss than the size of your win. Did I follow my process? Did I learn? Did I maintain my composure? That is the practice. Day after day, loss after loss, until one day, you'll look at a red number on the screen, and instead of a pit in your stomach, you'll feel a quiet respect. Respect for the process, for the discipline, for your own growth. And in that moment, you'll know you've become something dangerous to the market. You've become a trader who cannot be broken. If this connected with you, if you're tired of being your own worst enemy, hit like. It tells the algorithm to show this to other traders stuck in the same cycle. Subscribe to Losing Trader Psychology. We don't do hype here. We do real, gritty, psychological excavation. In the comments, I want to know one thing. What's the most expensive lesson a loss ever taught you? Not the money lost. The lesson. Let's learn from each other. Remember, the market is just a mirror. It reflects your psychology back at you, magnified. Clean up your mind, and you'll clean up your results. Now go get to work.